So with inflation soaring, economic analysts say increases in fuel prices are adding to price pressures, especially as rolling electricity cuts are forcing businesses to use expensive diesel generators to power their operations. Diesel and petrol prices have actually gone up 456% in 2019. Now, let's have a look at why prices have gone up. Well, on the back of relatively stable oil prices in world markets, it is clear that that is not the reason why prices are going up. The simple reason, actually, that prices are going up is because the price is now based on the interbank foreign exchange rate. Let me explain. Prior to the introduction of the interbank market, fuel suppliers used to buy their currency at 1-to-1 directly from the Reserve Bank of Zimbabwe. Now, that obviously was unsustainable in a country where the exchange rate was actually going up on a daily basis. It actually meant that the Reserve Bank was subsidizing fuel. So as a result, the Reserve Bank then announced that all currency procured for fuel would be done at the prevailing interbank market rate. This means that when the interbank rate moves, so do fuel prices. Anyway, so you've seen this in the past, because when the interbank rate was at 5-to-1, the actual fuel prices moved up to just over 5. And of course, when it moved up to 7.45 now, obviously the interbank market rate is now sitting at 8.8. So there's one problem with this, of course, because if the current price of fuel is around $7.45 a litre, and the interbank market rate is sitting at $8.88 per dollar, well, then you can expect one thing that is certain. And that is, in the very short term, you can expect fuel prices are going to go up. And there's no doubt about that. And in fact, I think even the government and Ministry of Finance is aware of this. Because if fuel traders are buying currency at 8.88 to $1 and they're selling it at 7.45 for a litre, well, obviously it means that unless that gap is bridged, government and the Reserve Bank is actually subsidizing fuel for you and me. So therefore, there's no doubt that if the rates stay where they are, you can expect an increase in the fuel prices. So, but with every fuel increase, long, hard-suffering Zimbabweans can expect one other thing: further price increases on goods and services. And this is in an environment where prices currently are even unaffordable to the majority of us. So let's talk about supply. Now, according to the government of Zimbabwe, Zimbabwe is using less fuel than we actually import. So the question is where is this fuel going? Well, one major reason could be arbitrage. This is really where people come into Zimbabwe, they buy our fuel cheaply and then take it out of the country and sell to neighboring countries where the price of fuel is more expensive. In fact, in terms of prices, Zimbabwe still has relatively the cheapest fuel in the region. And another area, of course, is that fuel dealers of petrol stations may be siphoning off fuel from their stations to sell it on the black market, where they can get a higher uptick. In other words, you could go onto the black market and sell fuel as upwards of $20 a litre. That's a huge profit margin. And of course, some unscrupulous business people are taking advantage of that. Another issue, of course, is supply bottlenecks. Fuel dealers are unable to access fuel due to payment constraints, ability to access the foreign currency in the market. And I would call this corruption. This is where fuel dealers and stations are probably holding back stock in anticipation of a future price increase. So those are some of the reasons why we can predict that fuel is in short supply at the pump station. So, and finally, Reserve Bank. Reserve Bank has said that, funnily enough, fuel dealers don't even have enough Zimbabwe dollars to pay for the foreign exchange to import the fuel. I wonder where that money is going. Well, your guess is as good as mine. So what do we do about this? Well, analysts are calling for the total liberalization of the fuel market in Zimbabwe. They contend if this is done, the fuel supply situation will literally change overnight. Government contends that if they do this, the price of fuel may become even more unaffordable to most people in the country, force prices of goods and services even higher, and worse, drive inflation up. And you know, inflation currently sits in Zimbabwe at over 175% year on year. Well, whatever the solution is, there are a couple of things that are clear. In the short term, definitely I think prices may rise. And there may not be a short-term end in sight for Zimbabwe fuel blues. I'm Andy Hodges.